Welcome to another edition of By the Numbers, where we take a deep dive into market affordability. We'll give you real properties and then show you real solutions on how to own that property. Today, we're going to be looking at a property that I found on Zillow, 128 Southwest 28th Street, Cape Coral, Florida, 33914. A listing price of recently reduced to $599,000. There is an open house alert on this particular property, Saturday, March 11th, 11 a.m. to 2 p.m. If you take a look at the bottom of your screen, you can see that the link, you can't click on it, but the link will be in the bio, so you can click on it to actually view the property on Zillow. And this listing is provided by Susie Eason from Berkshire Hathaway, Florida. All right, so let's take a look at what it takes or what you can expect when purchasing this home. We'll take a breakdown of the numbers. The full asking price, we'll look at what a $20,000 reduction in price would do for you, and then asking what seller concessions would offer in the way of affordability. So let's take a look at what full asking numbers look like. So in this particular scenario, we are using a 740 credit score, fixed rate mortgage. We are looking at conventional loan at 5% down, and then VA with 0% down. Those are the only two particular loan products that qualify for this purchase price. So let's take a look. At $599 full asking price, your loan amount with 5% down would be $569,050. Again, we're looking at a 30-year fixed rate mortgage on all scenarios today. Your down payment with 5% down is $29,950. And then when I pulled the rates for this particular scenario, it was looking at 6.875%, no points. And then the mortgage insurance with 5% down was $313 using a conventional loan. Now, moving on to the VA loan. Again, this is going to depend on your eligibility. Every scenario will be different. So if you qualify under a VA loan with zero down payment, this is what you can expect. $599 purchase price, 30-year fixed rate mortgage at 6.25%, and VA does not require mortgage insurance. All right. So what does that do for your payment? All right. Same numbers at $599 asking. You're looking at the principal, interest, taxes, insurance, or as we call it, PITA, your PITI. Your principal is $670, interest $3,069, $488 will be your homeowner's insurance, HOA, all of that wrapped into one, and then the taxes at $474, rounding it out to $4,700 a month using a conventional loan at full asking price. Moving on to the VA loan, we're looking at $772 going towards your principal, $29.16 in interest, $175 for homeowners insurance, and $474 for the taxes, bringing that total to $4,337 a month using a VA loan. All right, again, every scenario is going to be a little different, so the numbers that I used, this is what works there. All right, moving on to what if I ask for a $20,000 reduction? All right, so your conventional loan, we're looking at $549,050 loan amount. Again, 30-year fixed rate mortgage, nothing changed there, 6.875%, and then the down payment of $29,950. So you can see the reduction in the loan amount is the only thing that really changed here. And then the mortgage insurance went down a little slightly as well. Moving on to your VA loan, $579 is the new purchase price. Again, 30-year fixed rate mortgage, interest rate stayed the same at 6.25%, and then VA does not require a down payment if you qualify, and you do not have to pay mortgage insurance. All right, so now what about the payment? All right, for your conventional loan, we're looking at $646 going towards your principal, $29,061 to interest, $471 for the bundle of homeowners insurance, and then $458 for taxes, giving you a grand total of $45.36 a month using a conventional loan. And then moving on to your VA, $746 going towards principal, $28.19 in interest, $169 for homeowners insurance bundle, and then same taxes $458, giving you a grand total of $41.92 a month using a VA loan. And then moving on to the last option of seller concessions, or using the seller to fund your interest rate buy down. Conventional loan, back to that $599 asking price, gives you a loan amount using 5% down of $569,050, 30-year fixed rate mortgage coming in at 5.875%, paying $16,360 for those points. Mortgage insurance still at $313 for a conventional loan. All right, moving on to your VA. Purchase price $599, 30-year fixed rate mortgage coming in at 5.375%, paying $15,466 in points. And again, no down payment required if you qualify with the VA loan, and the VA does not require mortgage insurance. So what does that do payment-wise? Well, your conventional loan comes in at $774 going towards your principal, $25.92 going towards interest, $488 for your homeowner's insurance bundle, and then the taxes coming back in at $474, giving you a grand total of $43.28 for a conventional loan. And then rounding out, looking at your VA loan, $874 going to principal, $24.81 going to interest, $175 for your homeowner's insurance bundle, and then $474 for taxes, giving you a grand total of $4,003 per month. Let's look at what that all means with a side-by-side comparison. Your conventional loan is going to come in at, so no savings, using not asking for anything, just paying full asking price. There's no savings there. When you ask for a $20K reduction, this is what it looks like. Your original monthly payment would have been $4,700 with this scenario. We're going to subtract the new payment if you received a $20K reduction of $4,536, and that would give you a savings of $164 a month with you utilizing a $20K reduction in price. Now, moving on to the seller concessions, asking the seller to pay for your interest rate buy down, looking at that initial $4,700 if you had no concessions and paid full asking, your new payment of $43.28 a month with a new using a seller funded buy down, giving you a grand total of savings $372 a month. So you can clearly see that paying down your interest rate, having the seller use concessions versus paying for a price reduction, it's a little bit more cost effective. And then finally, let's look at your VA loan comparison. Full asking, there's no savings there. Your payment would have been $43.37 a month. If you ask for a $20K reduction, that payment would have been $41.92, giving you a grand savings of $145 a month with a $20K reduction. And then last but not least, your seller concessions, using that to buy down your rate. Initial monthly payment would have been $43.37 a month. We're going to take your new payment of $4,003 and gives you a savings of $334 a month in savings. So I don't know if you could see the math, but in conclusion, your seller concessions wins the game. If you're looking to win this market, have the seller pay for your rate buy down. It's a win-win. You saw the numbers, they don't lie. The seller doesn't have to reduce the property by another $20,000. It was, I think the max was $16,000. So it saves them $4,000, gives them $4,000 back net. And you also get to save every single month, on average over $300, using those concessions to buy down your rate. And for all you agents and loan officers out there, check out our agent growth classes. We have classes such as ChatGPT and AI for your real estate business, Instagram Reels, hooks and scripts, embracing the shift, all these to help you grow in 2023 and beyond. If you're not interested in any of those courses, check out this section. This is our education courses. We have things such as seller funded buy downs, how to use gift funds to sell more properties, credit issues, facts versus fiction, and then things like simplifying condo financing. If any of these ring a bell, go ahead and scan that QR code to the left side of your screen and set something up.